Hi, this is Charles. I'm here today in St John's Wood in a very busy pub restaurant, the Duke of York, where it's packed out with people today. I've looked around everywhere and everyone seems to be out and about, enjoying their day, spending money. It's you know, if you believe what the media tells you, you'd think that London was dead. There was nobody out at all, but it's not true. I was also out last night in the city, and the Ivy Asian was also packed out with people. So I think we've got to not listen to all of the hype that the economy has ground to a halt, because I don't think it has. Obviously there are meetings being cancelled and events being cancelled, but I don't think that the British people are sort of saying, well, we're staying at home because of the possible virus. They're just getting out and doing their own thing and living their life and getting about their normal daily life. And this pub, I had a delicious lunch, fantastic London traditional pub food in St John's Wood, which is a nice area, and you can hear the buzz in here. There's loads of people here. So what's been happening this week? Well, on the economic side, there's still fears of this coronavirus, and shares have taken a bit of a dive again, down 2-3% in New York and London, and money has piled back into gold, which is up a couple of percent. In fact, gold is up something like 30% on the year, more than 10% in the last month or so. Silver's kind of lagging behind, but a lot of money has gone into gold. I think the reason that gold dipped last week is that people needed to cash in their gold to meet certain commitments, and that's what made it go down a bit. But gold is up to over £1,600 an ounce. I think it will eventually crash through $2,000 an ounce eventually, but we'll see what happens. So it's up to $1,600 an ounce. We'll have to see when it will go through that 2,000, but I think it's inevitable. And we'll have to see what happens to the markets. It depends on how long this coronavirus panic lasts. Now, the government have said they're taking measures to help people if they have to take time off work, but it kind of reminds me that if you're in a job where you're relying on an employer to pay you, or you're a self-employed plumber, solicitor, accountant, your only way of making a living is through your work, your sweat, your labour. You're giving your time for money, and if you can't give your time for money, then you're in trouble unless you've got insurance cover, which can be quite expensive. What you need in your life is to have an income, but also a passive income as well, a fallback income. And one of the ways of getting that is to invest, obviously to save and invest, and you can invest in the stock market. But another, perhaps a more trusted way over the last few years is to invest into property and build a passive, or what I might call a semi-passive income in property, so that when things are going wrong and you maybe have to take time off, you've still got something to fall back on, and that's what property gives you. Now, if you'd like to know more about how to invest in property, how to get into property, in some cases using none of your own money, then I have some free courses available where you can go on a taster course for a day or a weekend and learn the various strategies. You can learn about single buy-to-lets, houses in multiple occupation, HMOs. You can learn about using options. You can learn about using rent-to-rent strategies where you don't need deposits, you don't need your own money. And also joint venturing, raising capital, mortgages, all of that sort of thing can be given to you in brief on a taster day. And then if you want to dive in further, you can elect to take up other courses. But if you'd like to know more about that, get in touch with me. It's charles@charleskelly.net or on Facebook Messenger. And I'll put you on to the people that I don't run the courses myself. So I'm just passing this on so that you can build yourself a passive income in relatively quickly compared to, say, saving for a pension for 40 years. This is the way you could do it within 1, 2, 3 or 5 years. You could build yourself a passive income and even quit your job. So get in touch, charles@charleskelly.net, and I'll send you those details out right away. In the meantime, have a great weekend, and I'm going to enjoy it. It's a beautiful sunny day in London, right here in St John's Wood, very close to the Abbey Road studios where the Beatles made all those songs. So thanks for listening, and I'll speak to you next week. Bye for now.